Michelle Morgan here with a trade review process of a trade that I entered today. It was a buy on the Great Britain Pound JPY off the 15-minute chart. So as we can see, prior to getting into the trade, there was heavy volume here. This was at 4:45 a.m. This was after a speech by Bank of England Governor Carney. Yes, speech. So his speech came out at 4:30, and at 4:45 there was huge volume downward momentum, downtrend. So I noticed here at the bottom, a teaser bottom had formed with the bullish sentiment happening, breaking the 176.4 resistance line. But before I was going to enter the trade, I wanted to get confirmation of this particular candlestick to confirm that in fact it was a reversal in motion. So when the second candlestick formed here, and so once the candlestick opened above the 176.4 fib line, I entered into a trade here, into a buy. Now, something that I noticed was that the next fib line was very close, and I know my take profit and stop loss is 7 pips, and so I did give it 7 pips, what was just barely above the next fib line at the 150, the next level of resistance. And so I did that, and to me price action was showing that I was going to hit that, because it did hit it up here as well. Now the only issue is that with 7 pips here was that I didn't give myself a lot of room to breathe on the stop loss end of things, and so that would have been my only issue, which was my issue here. So giving it 7 pips, as you can see here, it doesn't really give the trade a lot of room to breathe. And even with the entry price of 7 pips and the stop loss of 7 pips, it technically would break without even coming back out of this entire candlestick. So it would break while remaining in this candlestick as well. Okay, that was a screenshot that I was sharing on my trade review process for the Great Britain JPY, but I also want to share it on the actual MetaTrader 4, because I feel like I can explain it a little better, and then I can also see the outcome of the trade as well. So because, and I have the dash line set up here that show that are showing my take profit, my entry here on a buy, and then my stop loss. So as you can see how close they were together when my trade actually exited from the trade, it was still in the current candlestick. So 7 pips wasn't really enough space to give my candle room to breathe, especially because the stop loss was still in the body of the current candle, which, unless there's heavy volume, that would have been bullish heavy volume, then that would have been okay. But in terms of this particular trade, it wasn't moving very fast, and it was just a confirmation above the resistance fib line that I do need to be more weary or aware of that, and making sure that I have enough space to breathe, because as we see here, the price did continue to move up as I predicted it would. I just didn't give myself enough space to breathe to actually hit the take profit, because we can see here like 1 or 2 candlesticks after the trade, after I entered the trade, they hit the take profit. It's just that I didn't give myself enough room to breathe here. So in that case, I could have lowered my take profit maybe to this fib line here, or I could have actually put the take profit to the 123.6 fib line, because I do figure it has a growing upward momentum, so that would have given myself more room to breathe. So here, if I would have entered, that would have been 25 pips, and the stop loss on 25 would have been down here, so way below like where the Twitchy bottom formed. So this one was more of a learning process, and don't make my stop loss in the middle of a candlestick at the bottom, especially if it's not going with heavy, strong volume happening in place. And then as you can see right now, clearly the take profit would have been reached where the current price is. So live to trade another day, but my stop loss closing out because I didn't have enough room to breathe.